Oh, hello everyone. It's Susie here from Esoteric Trading Solutions. I hope you're all well, looking after yourself, being kind to yourself, being kind to your family and friends, being kind to your animals, your putty cats, your beautiful dogs, and just being kind to people in the world just to look after yourself. Please do look after yourself with this horrendous coronavirus. I'm a bit worried because my brother's in hospital at the moment. He went in yesterday morning, so got really bad headaches and everything, so it's really a big concern. In Australia, obviously, there is lockdown, I suppose you call it, because we're being told to stay at home, and these figures are getting a bit worrying with what's going on with the coronavirus, I must say. But today it will be a long video because I want to go through all the markets and just have a catch up on what's going on with the fiat markets as well as the cryptocurrency markets and just news stories. So I guess today most people are aware that the US coronavirus figures have topped China at the moment. They do have a lower death rate, thank God. Italy's certainly up there as well. The US is over 1,000 for death rates. China was over 3,000 odd. Italy's up there as well, 8,000 odd, which is more than 10%. Spain's up there as well, and this just seems to be progressing even more. So please, keep washing your hands. Don't put your hands to your face like I just did then. It's such a habit. And please do look after yourself. But today what I thought I'd do is just look at all the markets and just have a chat generally about what I think in terms of markets. I have done a lot of videos on Patreon lately, and you should probably subscribe to that. It's only going to cost you $10, $20, $35, $45 or $100, depending on what you can afford and to what kind of information you'd like to get. But on Patreon particularly, I have said that gold is, in my mind, an absolute buy. To me, it could go really parabolic, gold, and certainly in times like this, gold nuggets particularly, not gold jewelry or anything, but gold nuggets become very valuable, and I do believe that gold could go higher and higher. Also, I think risk assets are going to be a risk in terms of fiat risk assets being equity markets, even though they're rallying at the moment with the $2 trillion stimulus program that the US has just put into place. But I do believe equity markets are not going to fade well for the next 10-15 years, and I do believe that crypto will be the place to be, specific cryptocurrency particularly. I particularly, Bitcoin, XRP, and some of the cryptos that I like very much, which you'd see on my Patreon. You'd see my investments within Patreon. But and I do think there will be a lot of opportunity in terms of crypto land, but you really have to be very specific about what you do buy in crypto land, that's for sure. Let's get a glass of water. So, there's more than 4,000 cryptocurrencies, and most of them will not be surviving in the next 2 years. That's a fact. And obviously with what's going on economically as well as with the virus, it's even probably going to make that even faster to what's going to survive and what's not going to survive. And that's where you really need to understand the technology, the business, whether they're making revenue, whether they're not, whether they're best of breed within that sector of cryptocurrency. Excuse me. So let's just have a look at markets, and there I go, touch my face again. I know it's terrible. You just get so used to touching your face with your hands and everything else. But let's have a look at the markets overnight. The Dow did very well. It was up 6.4%, which is a lot, back to 22,552. I think the Dow could probably get to about 24,000, which I've sort of had in my mind, 24,000, 25,000. That's where I would be selling the Dow, as far as I'm concerned. This increase is only temporary in terms of the money that's being ploughed into the market, and I feel that it's going to be very hard to support a Dow over 25,000. That's my personal belief. This is not financial advice. I'm not a financial advisor, but this is from my own personal belief. The Russell was up 6.2%, the Nasdaq was up 5.7%. CBOE VIX index, which is the volatility measure, or the fear measure if you want to call it that, has come down from 80 to 58.75. And honestly, if that got to 50, I'd be looking to buy that on CFDs. That's pretty much what I'd be doing. We see that sectors that did well were utilities, real estate, and every other sector did pretty well as well, but those two did the best. And also we see other markets also went up on obviously the big the big stimulus programs which are being done by central banks all over the world. Bitcoin is moving up. Now don't forget, Bitcoin will do its halving in May, where they basically pay half the fees to the miners. Now also Bitcoin mining rates are way down at the moment, which means less Bitcoin is being mined, which means the price of Bitcoin will rise. There are some people out there that are saying that Bitcoin can easily get to 22,000 within 12 months, and I think that's a real possibility. That's my feeling on it. Novogratz is buying more of it, and I do believe it can get to around 22,000 within the next 12 months. I think it could be even earlier than that. That's my view. Pound US went up. US yen did come down. The US did under appreciate last night, simply because there was about 3.2 million unemployment claims. So that was up from 625,000 a week or two before. So that is concerning, and I think that's going to be a theme globally, that there's going to be much more unemployment going globally, which is going to have absolute repercussions on companies, on consumer demand. The consumer's not going to have enough money. They may not even be able to pay their rent or their mortgage or whatever it might be. So in that environment, you could even potentially see real estate come off as well. So we just have to watch very carefully to see what's going on. Gold did come down, but we'll look at this in more detail. Down to 625, but it's still, as long as it stays above 1580, in my mind, that is very, very bullish indeed. So let's just have a look at the other markets. Let's look at the other equity markets out there. And generally, most of them would have probably performed very similar to the US. We see that Jakarta was actually up, quite a bit, 10.19%. I do think these equity market runs up is still very temporary. I do believe the equity market for the bigger picture is going to be down. Okay, so the equity markets at one stage were down about 27%. They've all come down 15 to 19%. Okay. I think it's going to be a negative year, and I believe that will continue to go forth, that it will be a negative year. The ETFs, I personally would not be touching ETFs. In this sort of market, ETFs underperform, and they will underperform even worse than physical equities. That's my view, and I will not, for me, touch them. So yes, we've had a big move up, but I do think it's temporary, as I said. So let's go through the other analysis here. So what else we got here? Let's just go to fixed income, and let's look at yield curves. Okay, now we know that the US yield curve last night in the very short end went negative. Okay, and we know that yield curves globally are very mixed. Some yield curves are flattening quite dramatically. If you look at the Aussie yield curve, the yields are going down in the very short end, and they're going up in the very long end. Okay, that's a steepening of the yield curve, but it doesn't seem to be consistent with every yield curve that we actually look at. Okay, also in Brazil, we've got a steepening of that yield curve. They're actually selling 10-year bonds more and buying the very short end. Okay, if we go to Canada, we've got the same thing, a steepening of the yield curve. Canada did do an interest rate cut, quite a massive one, and that yield curve has steepened quite dramatically. In other words, the 1-year rates come down a lot more than the 30-year rate that's going up. Okay, so let's just quickly go through here. China's yield curve again is a steepening curve. Interesting. France, all yields are starting to sell off, which is interesting, which is a month's change. So that's actually going up in yield, and I think you're going to start to see this as well. There's going to be a lot more differentiation between different yield curves depending on the countries. Okay, some countries are going to fare worse in terms of economic growth going forward, and some countries will fare a bit better. But it's interesting, you've got yields in France for the last month going up, and interestingly enough, you've got yields in Germany for the last month going up in yields. Okay, that's very interesting. Also Greece, keep an eye on all these countries that have a lot of problem, that had a lot of problem pre-coronavirus. Now that was certainly Italy, Spain, Greece and Portugal. Very, very bad economic growth, and now with coronavirus it's going to be even worse. So India, again, we've got a steepening of the yield curve here. In other words, they're selling off the long end, which is interesting. Indonesia, all yields are going up. So these are emerging market debt countries, and all their yields are going up, which means their financing, if they look to finance their own budget or whatever, is getting harder for them to finance, and it's going to cost them more in terms of yields. Okay, in other words, yields are going up. It's going to cost them more for borrowing money globally. Okay. Again, if we go to Italy, we've also seen the same story here. Yields are going up, okay? So we find yield curves globally are very mixed. But what this is telling us is in these countries, the end investor that wants to invest in their bonds are demanding more yield, okay, because of the risk. And I've said this before, Italy's got the third largest bond market in the world. You've got you've got America first, then Japan, and then Italy. And there's a real risk that Italy may not be able to pay off its debt, okay? A real risk of that, just like Greece. And it'll have to be supported by the European Central Bank, okay? And that doesn't surprise me that their interest rates are actually going up. Doesn't surprise me at all. Japan, you've got the very short end going down in yield, but you've got the long end going up in yield. Now, Japan's always been negative. To have rates move up by at least 10 basis points on a very low base is quite substantial, okay? So yields are going up. If yields continue to go up, it's not great either for the equity market, okay? The equity market tends to like low yields or lower yields, and yet yields we see are going up, okay? Right across the board. Lithuania, Malaysia, Mexico, even the Netherlands, okay? New Zealand was down, Nigeria up to 60, Norway down, of course, Pakistan's down, which is interesting. But Portugal got the same story, very much like Italy, okay? Yields are going up, so their funding costs to borrow money from the capital markets are actually higher and higher. We see that in Romania as well, Russia the same story, absolutely, and we do see a steepening of the yield curve, okay? So South Africa, we've got the same story, and it doesn't surprise me. These are like emerging market debt countries, okay? South Korea, we've got a flattening of yield curves. They're buying the short end for safe haven, and they're selling the long end. So steepening, I should say. We've got a steepening of the yield curve, my apologies. Spain, we've got the same story. Interest rates are going up. Even in Sweden, they're going up. Switzerland, they're going up. So again, yield curves are going to drive the equity market as well as the economy as well. Now what we've got here is United Kingdom yield curves going down, okay? And again, a steepening of the yield curve. They're buying the short end over and above the long end. And the US, we've got basically a steepening of the yield curve. Now, interestingly enough, last night also, the US had very short-term rates, 1 month, 3 months, 2 months going negative as well. Okay, and that is not great on the face of it. If we have a look at the story here, negative interest rates have arrived in the US, and stablecoin issuers say they'll maintain a 1-to-1 parity with the dollar, but it is not great for stable coins. And the reason why that is, if you look at the 1 month and 3 month rate, they're below zero, and so they're actually negative, right? In such a scenario, issues of USD pegged stablecoins could see some challenges to maintain the 1-to-1 parity to the US dollar, okay? The reason for this is stablecoin issuers keep collateralized dollars in bank accounts and earn interest on them. In the case of negative interest rates, they would instead be charged to keep their funds in the bank account, and that's exactly what happens, which could result in fewer dollars in those accounts than the number of stable coins in circulation. So in other words, they're not getting any interest on their money. It's actually going to cost them money to keep their money in the bank account, which is going to come off that 1-to-1 parity, okay? So it certainly poses a problem. Negative interest rates can potentially pose a challenge to the ability of the US-backed stablecoins to operate as a 1-to-1. And that's not a great story, because they're going to have to adjust if they're being charged for keeping money in the bank. Say for example, you've got one stable coin, you've got $1 in the bank, but if it's costing you money to put it in the bank, you're only going to come out with 98 cents compared to one stable coin that's issued. Do you see what I'm saying? And that is a problem in itself, okay? So do keep that in mind. It is a big problem when we talk about US stable coins, or stable coins that are against US dollars, okay? And that would be like any other stable coin if it was euro against euro and there was a negative yield in the very short end, okay? So if we go to yield curves, we've seen nothing but steepening in overall yield curves. If we go to corporate credit, now corporate credit overall has been negative, and as you know, it's been anything negative from 4% to negative 16 or 20%. So and it's right across the curve now. Okay, it's in AAA, AA, A, triple C. It's right across the corporate debt curve, which means corporate debt, it's costing them more as a corporate to fund by corporate bonds. Okay, in other words, the end buyer is asking more interest rate yield and credit for that corporate. Okay, so in other words, it's becoming more riskier. If I'm going to buy a corporate bond, I want more yield and credit for that corporate. Okay, because the risk of things not doing very well, and the risk of the corporate not paying back the debt is getting higher because of the economic environment and because of coronavirus. Okay, and that's pretty much what's happening, right? So we've seen corporate debt come down in price and go up in yield, and that's what we see here. So up in yield, down in price. So when yields are up, price of corporate debt is down because the capital markets is asking for more yield because of the risk that corporates may not be able to pay back their debt if they issue more debt. Okay, and that's pretty much what you're seeing, and that's why if it's a triple B or triple C, they're going to underperform even worse. If you go to the triple C here, they're still underperforming by 26%. So in other words, if you had $100 of corporate paper that was triple C, it's now worth less, 100 less 26.25%. The price, is less than that. Okay. So in other words, the price would be what? Take off the 26.25, right? So it'd be something like 73 cents out of $100. Okay, so you've actually lost money. So good idea to keep an eye on all these, because all this affects equity markets too. Because as I said before, a corporate can actually issue equity or issue debt. If it's becoming more expensive to issue in the debt market, it's going to become more expensive to issue in the equity market as well. Okay, and that's pretty much how it all works. Right, so if we look at other things here, we'll find even TIPS are not performing very well. Municipal short debt is not performing well. Even floating rate corporate debt is not performing very well, or high grade corporate debt. Senior loans are down 10%, high yield is down 10%, and convertibles are down 13%. Okay, so corporate debt per se is not performing very well at all. So let's go to currencies now, and we know that the US dollar got hit last night. It was down quite a bit. The Aussie, surprisingly, to the US dollar is up at 0.6099, and I feel the Aussie is way too high against us to the US dollar. I mean, things in Australia are very, very weak at the moment. So in my mind, for me as a trader, I'd be looking to sell the Aussie. If it gets over 61 cents, to me, that's a sell. That is a definite sell. It's just way too high, given where the economics are here, given what's happening. We've had the fires here, we've got the coronavirus here, we're actually in Asia. Our GDP is going to be off dramatically, our gross domestic product, because we don't have the tourists coming in from China. We just haven't got the growth we have. Unemployment is rising. Things don't look great here. So that Aussie, in my mind, is just way too high. Okay, and I do believe that the euro is going to be vulnerable as well. The euro, in my mind, shouldn't be that high. I think the euro is a sell to the US dollar. That's my view, because I think what's happening in Europe is worse than what's happening in America, particularly with the coronavirus. We've seen Spanish cases go through the roof. We've seen Italy cases go through the roof, 80,000, Spanish cases 50,000, and it just seems to be getting worse and worse, and other countries are rising in Europe as well. So keep an eye on currency rates. We're going to see a lot more volatility in currency rates, that's for sure. If we go to the commodity markets, another one that I always keep an eye on is, and I've mentioned this to you before, is the Baltic Dry Index, and it's basically a shipping index, and that tells you the world growth around the world. That Baltic Dry Index is off year-to-date 47.8%. That is massive. We're only talking till March the 26th, whatever date it is, 27th here. and that's off nearly 50%, which means literally shipping around the world has fallen off 50%, which is basically a lack of demand or because of the coronavirus. Things are being stopped between inter-country, and we know that, there's lockdown everywhere. So that's a dramatic fall. If you look at the Commodity Research Bureau Index, that's down 31%, which is also a dramatic fall in commodities, okay? What has gone up just for the day is ethanol, gasoline, but again, year to date, these figures are off dramatically. Gasoline's off 61%, okay? Brent crude is off nearly off 59%. WTI crude oil off 61.85%. The disparity between Brent crude and WTI crude oil are quite a large disparity. This is UK, this is US, right? Also, gold, as I said, gold in my mind will continue to rise. It's above 1580 US dollars. There's a shortage of gold nuggets, as I've said in my previous Patreon channel. There's a massive shortage. Now, also, we are seeing agriculture very mixed, and I do believe that agriculture, particularly the soft agriculture like soybeans and wheat and this sort of thing, which is food, will go up, okay? I do believe that. Interestingly enough, an article here, orange juice futures are soaring in global markets, and basically it's because of the coronavirus. People want to get obviously healthy, they want to build up their immune system, they're buying orange juice and they're buying oranges, and the future price of orange juice has spiked by more than 20% in March, and it's basically because consumers want to be fairly healthy and they're concerned about their own health, okay? So that's what's happening over there. Lots going on. People are concerned, and basically, they want to get as much, good orange juice into them as they possibly can, okay? So the prices of orange juice will be higher in the stores, and certainly the prices of oranges as well, okay? So there's always a lot going on, but also, as I said before, with what's going on, we're going to find the gross domestic product globally is going to be, negative. I believe we're going to be heading into not just a recession, which is 2 quarters of negative GDP. I think there's a real possibility that we're going to head into a depression. Now, if we do that, we head into a depression, industrial production is going to be way off, very low. Depression, unemployment is going to be right up, going to be much higher than what we've seen here. Obviously, the US claims for benefits was up a lot. That's the case. We're going to find also consumer demand is going to be way down because people just won't have money in their pockets. And if you're a consumer-driven economy like the US, you're going to be in strife just like Australia, because 70% of the growth comes from consumers. If the consumers aren't consuming because they don't have any money, you're going to find the growth is going to come off even more, okay? So it doesn't paint a very good picture at all, I have to say, and it is a bit concerning. So let's have a look at the cryptocurrency market, and let's look at the news on Slack as well, just to have a good overview and some of those news stories as well. When obviously people were talking about Bitcoin getting down to $3,000 US, which I didn't believe at all. I consider Bitcoin a buy here. I do consider cryptocurrency at the moment a buy. It's not financial advice, it's just for my own personal self. And I do think certainly XRP is a buy. I was calling that when it was at 15 cents. I think it's cheap. I think particular cryptocurrencies, specific cryptocurrencies are very, very cheap. And if you do look into my, get a Patreon membership, you'll be able to see exactly what I hold. Also within Patreon, I'll be doing some, putting in some crypto reviews of what I do hold, and I do some very detailed cryptocurrency reviews, okay? So, you'd have to pay for that $35 US or more. Generally, if I do an extremely detailed cryptocurrency review, it's going to cost, anything from $250 US to $300 US. So if you do buy a Patreon, you're actually getting a lot of information from me very, very cheaply. If you, buy a Patreon $45 and up, you get to see cryptocurrency reviews and $35, and also you get Udemy and all sorts of things. But obviously on the high levels you'll get much more from me in terms of reviews and in terms of what I'm actually sitting in and where I believe you're going to make serious money in the next year or so. Not even in the next year, in the next 6 months. In my mind, cryptocurrencies are a buy, and with this environment and what we're seeing, with world fiat markets, it's exactly what I believe was going to happen 2 years ago is exactly happening. And I think this is going to be the real driver for cryptocurrency, okay, for digital currency, just simply because currency, old money, if you want to call it money and coins, are germy. They carry viruses and people don't want to hold them, and it's old, it's the old traditional system, if you want to call it that, okay? So I think there's going to be an amazing opportunity within cryptocurrency, right? Amazing. So, we know that the markets have been down quite a bit and they've been negative for about 2.5 years, but I do believe in the next couple of years, these markets are going to rally and they're going to go up quite a lot, and you need to be in the right cryptocurrency that's not going to fall over because the technology doesn't work, or you don't have the right team behind it, or they're not making money, okay? And there are some cryptocurrencies, well, a lot, that I'm on record for saying they're absolute garbology, okay? And particularly something like IOTA, which is, very close to the price of XRP. It's a technology that doesn't work, okay? And it should be nowhere near the price of XRP. And another one like EOS, for example, which, as far as I'm concerned, shouldn't be there. But there's many other cryptocurrencies like that I believe should not be where they're pricing, because the technology doesn't work. And if you look into them, there's even more problems, okay, with that cryptocurrency and, the founders behind it and who owns it and all this sort of thing as well. Or there's no decentralization. Again, people go on about XRP and decentralization and Ripple. XRP is extremely decentralized, but I can tell you off the top of my head 100 cryptocurrencies that are not decentralized, and not one piece of social media picks it up, or not one writer of cryptocurrency picks it up. They all follow each other, and often the social media that you're reading is actually incorrect because no one's done the level of research that I've done, okay? And there is so much garbology out there in terms of the free press that you're getting completely the wrong information. Seriously, you've got to do the work that I've done to know that. Anyway, Bitcoin dominance at the moment is 67%. Reported market cap is still only 186 bill. At its most bullish moment, back in 2017, the market cap was about 880 bill, okay? So this cryptocurrency market has a very, very long way to go. But in saying that, in the next year, up until the next year, there's going to be a lot of cryptocurrency that goes by the wayside, that falls off, the screen, goes broke or won't be listed because of lack of trading or lack of liquidity. And again, there'll be exchanges that fall over as well, okay? And I know the exchanges that are going to fall over too, right? So if people aren't prepared to pay for good quality research, and if it's not biased or anything else, and by someone that knows what they're talking about, at least they're going to make the right decisions. But if you don't do that, you're actually going to make the wrong decisions and lose a lot of money. So you're basically paying for what you get. If you don't pay for it, you get nothing, and you're going to lose a lot of money, because certainly in this market, there's going to be a lot of money lost in the next year. Even if the market rallies, there's going to be a lot of cryptocurrency that's just not going to survive, and we'll see that going forward. And I do agree with Brad Garlinghouse when he said that 98% of cryptocurrency will not be here in the next 2 years. So this is where the market is at the moment. As I said, overall, I'm very bullish, but very bullish specific cryptocurrency, not just the whole market. Okay, not just the whole market. I think there's a lot of scams in crypto land, and I'm looking at some on this right now. Okay, and basically, if you become a Patreon member, $45 and above, I'll tell you which ones I don't like, and I'll tell you which ones are scams. And I've certainly got the research to prove it too. I don't just say that, I actually have the research to prove it too. So if we go to this article here, Pantera Capital, and I watch Pantera a lot, they're very, very smart operators. The CEO believes Bitcoin will shatter its all-time high record soon, and I agree with that. He says in the next 12 months, Bitcoin could easily get to 22,000 and more, and I totally, totally agree with that. Simply because there is a lack of Bitcoin around, it's going to be mined less. There's only 3 million left to mine. Once it's bedded down in portfolios, it's going to stay there. So I've got an itchy foot because I've been bitten by mozzies last night, mosquitoes, which it's hot in Melbourne at the moment, and I get bitten a lot by mosquitoes. They just love my blood. But anyway, so I do believe that. Mr. Dan Moorhead, the CEO of blockchain and crypto hedge fund Pantera, believes it'll break its record high of 20,000 odd. And he said, I've spent 35 years trading global micro disruptions like myself. This is like no other. This will certainly end the longest global expansion on record. It is likely to have a larger global economic impact than downturn in recent memory. Now, I agree with that. Bitcoin, he says, was born in a financial crisis. It will come of the age in this one, okay? So now we've got trillions and trillions of dollars in deficits with quantitative easing and everything else. Central banks are broke. Where do they keep getting the money from? They can mention 2 trillion. They can put into the markets, the financial markets. Where does the money come from? Think about it, people. If they don't get it from the tax, from you guys taxing everyone that works, it's going to be less workers, so they can't tax them, right? If they're spending, they've got no money. So where does the money come from? Clearly, it needs to be funded by, by other countries, right? We know that China buys US treasuries and Japan. But what happens when China and Japan run out of money and they can't fund the deficit, right, of the US government, just like any other central bank in the world that's broke, right? To me, I can see the big picture, central banks going broke because they just don't have any money, right? And then you get a devaluation in currencies. Now, if that's the case, we're all going to lose money if we hold money in fiat currencies, which I don't want to do, because as far as I'm concerned, the Aussie US, and I'm an Australian, I don't want to invest in the Aussie because I believe the Aussie is going to go down to 45 cents, right? In 2001, I remember it very clearly, the Aussie against the pound was at 0.33, right? And it was about 45 cents to the US dollar. And I believe that's where the Aussie's going. So for me to sit in Aussie dollar deposits, I'm going to continue to lose more and more money. That's why I will buy crypto and nothing else, and gold, okay? Pretty much that, and that's pretty much it. So with this deficit bailout, it's going to have a very negative impact on the finances of every central bank in the world. And, you have to question, where is the funding coming from? Where is the money coming from? Because someone has to fund that money, okay? Someone. And it's certainly not being funded, it's being funded initially by the US taxpayer. But, as we know, there's becoming less and less US taxpayers, okay? Because of this whole situation with the COVID virus. So let's just check out what else we got here. So we know that the $2 trillion package was the largest rescue package in American history, okay? And again, they can't just keep printing, dollars, printing bonds, because someone's got to buy them. And what happens when the rest of the world runs out of money, okay? And what it leads to is the US balance sheet, getting larger and larger, and now at the moment it's now 5.5 trillion. In 2008, off memory, I think the balance sheet was about 8 trillion. So they're buying treasuries, they're buying mortgage-backed securities, they're buying, literally, commercial-backed securities. But eventually they're going to run out of money, okay? And when they run out of money, it's going to be very severe because they get money from taxing, taxing the population, okay? And also they get money from exports, right? Revenue in from exports. Now, if things get worse and worse, they're just not going to have that money. And that's a big concern, okay? A big concern. And also they keep issuing bonds and no one buys those bonds, then they're not going to be able to fund anything. And the deficit keeps getting worse and worse, okay? So you need to really, excuse me, keep an eye on that. Not a great story, okay? Not a great story. So according to CoinMarketCap, there's 5,266 cryptocurrencies and 99% or 98% are going to die in the next 2 years, that's going to be a lot of deaths in cryptocurrency, okay? So you have to think to yourself that 98% of the time, every cryptocurrency you look at, and this is how I see it, 98% of the time, every cryptocurrency you look at is a scam or it's going to go bust, okay? You know, and there's a high chance of that, right? And also what you see in the first, you know, the top 30 or 50 is not going to be there in the next year or so. And that's a fact, okay? That's an absolute fact. So you need to keep that in mind when you're looking at cryptocurrency. So let's have a look at some of the news stories in terms of crypto today. And I told you this would be a bit long today, but just the top stories. Telegram responds to judge ruling on fight with the SEC. Looks like they may not allow the Telegram ICO to go through. And as far as I'm concerned, I just thought that it was overpriced. It was a bit of a scam. And I think, you know, I think personally the money should go back to the end investor. I don't know why the end investor bought into Telegram. It just seems like a joke to me. Also just talks about obviously Ethereum and Ripple doing okay. New type of Bitcoin ransom claims to infect victims with coronavirus. I don't know what that's about. Tesla's price up big following lawsuit settlement. So have a look at that. Brave partners with Binance to develop in-browser crypto trading. New partnership between Tron and MetalPay allows instant buying of TRX in the US, and that's a good story. We've got Hive continues independence, push the Steam stakeholders migrate to new chain, and don't forget Tron did buy Steam, so we have to see what the problem is there, what sort of effect that's going to have on their business. There's a harassment lawsuit against Tron, Justin Sun to go to arbitration. Australian bourse delays blockchain settlement launch amid coronavirus. What else we got? Dr. Craig Wright sets record straight on Bitcoin node. Ripple Labs donates $200,000 to combat COVID virus pandemic. Binance announces a 1 million futures trading competition, and that's smart with those guys because they've just launched futures, and they want to obviously get more people to open up accounts. What else we got here? Anything of interest? Bitcoin hash rate down 45%, which we mentioned, the largest single drop in history. And also there's difficulty has gone up quite a bit, something like 15%, 16%. The mathematical formula that they have to work out, the miners, is getting harder and harder. And what else we got here? Something about BitBay's 18-hour outage. It's another exchange that may fall down. So be careful of the exchanges you actually trade with or invest on. Fortune favours Tezos, Monero, VeChain as altcoins register over 30% gains. Surprises me that Monero's in that, even though it's a privacy coin, because I really feel with regulation, privacy coins aren't going to, you know, be around. And you do see that Monero's been taken off some of the exchanges as well for trading, which is interesting. Nation tokens are surging, just like stocks. And interesting enough, in cryptocurrency land, because we've seen with this coronavirus that there's more people who have to work from home. Telecommunication cryptocurrencies are doing quite well, and they're up like about 11.35%, or the sector change up 18%, according to this article. And you can see the ones that have done fairly well: Loki, Orchard, Mainframe. And that one, Loki, being in Melbourne, Australia, I'd be interested in having a look at that. Its own blockchain. So that one I'm going to do cryptocurrency review on, and I'll put that in Patreon. That looks quite interesting to me, particularly because it is Melbourne based. But then you've got Mainframe and all these other ones here, so I'll do a good research on that. But they're doing quite well apparently. SNT, which is basically a privacy messenger and Ethereum based, has gained 77% since March the 12th, which is very, very interesting. So I'll certainly have a look at that. If we go back to Slack and just see what else is happening here. Let's go to the coronavirus. As I said, gold looks pretty good to me. I would be buying gold because it's coronavirus. Just going through, obviously the virus is getting worse, which is not great. Let's go to exchanges. And I like to keep an eye on what's going on in exchanges. Gox trustee may sell some crypto assets to pay back some repayments. Global stablecoins may be subject to security regulations. That doesn't surprise. ASX, Australian Stock Exchange, has delayed putting on the stock exchange onto blockchain, which is unfortunate. They were going to do that this year. What else we got here? Just quickly going through some story about transferring flights and airlines with blockchain. Gold-backed stable coins should do well. Coinbase, Fidelity, more coin metrics. So what else we got there? US FSC hearing on domestic and international approaches to digital currency. Futures are basically settlement date, Bitcoin halving on the 8th. It's got Bitcoin April the 8th. I thought it was May, but maybe that's not right. Yeah, that's Bitcoin Cash, I should say. That's right, Bitcoin Cash. Bitcoin is halving on May the 12th. And then you've got some other stuff here. Soft Catalyst, Cardano releases, Shelley mainnet, and Byron reboot, and a few other things there. So let's quickly have a look at everything else. Looking at digital fiat for payments, pushing on with its central bank digital currency. Just very quickly, Binance, they've got trading futures now, and they're looking to bring in something in Australia as well, which is of interest. So you'd be able to do things in Australia as well. They might be opening up an operation in Australia. Bitcoin Cash, some say it looks bullish at these levels. Bitcoin Cash miners to leave network. Okay, that's interesting. Keep an eye on that. Also keep an eye on Bitcoin Satoshi Vision. Okay, Craig White challenges court order criticising his evidence in the 4B Kleiman case. I mean, he says he is the Satoshi, but look, I'm not a big believer in that. So keep an eye on that. What else we got here? Cardano. What do we got? Cardano support for disease research highlights community's efforts. Cardano chief compares US dollar to one coin scam as Fed keeps printing. Yep, I'd have to agree with that. Dogecoin. What's been going with them? The old Dogecoin. No, not much of interest there. EOS, stage 1 of risky EOS work proposal system approved. I don't like EOS, as you know. Never have, never will. Ethereum Classic has done well. Ethereum hasn't done too badly either. Ethereum 2.0 audit highlights risks to block proposals in P2 protocol. Okay, Facebook, very quickly. Doesn't look like Facebook will get through, I don't think. Kik is one it closed down because of the SEC lawsuit on them. And Litecoin, what's happening there? Very quickly. Just Litecoin could see another price crash soon, if you believe that. Imminent correction. Okay, Monero is doing well for some reason. I never quite understand that. Something about payments with privacy coins, sexual abuse. Okay, Neo developer unlocks 1.6 million tokens. Huge crash incoming. Okay, don't know what that's about. 11 million tokens has been dumped. Again, I've never liked Neo either. They've only got about 6 to 8 nodes. Not great. Tesla Foundation moves to settle a $25 million consolidated lawsuit, which is good for them. Tron partnered with MetalPay to allow instant buying of TRX in the US, which is good. Good story for Tron, and also there's something going on with against the founder. And what else we got here? XFin. Interesting things are going on with XFin at the moment, so I need to have a look at that as well. There's always a lot to look at here. XRP, very quickly. Lots of wallets being done by XRP. They want to go digital currency. We know XRP's got, can do that quite easily. Zcash reward distribution vote. What's happening with Tether? Very quickly. Huge wallets are going through. Transfer from Tether Treasury to unknown wallet. 60 million and 12 million. Wow. So some large figures going through Tether at the moment. And wallets. What's happening there? Digital dollar wallets projects is not safe haven for crypto. Interesting. Okay, so there's some security flaws. Ngo warns of major security flaw among DApp wallets. Okay, so be careful of that. All right, guys. Look, that's all I'll go on today. That's a fairly long video. Sorry for it being this long. Hope you're all well. Please do look after yourself. Be careful with coronavirus. Really be careful. Social distancing is the key, and washing your hands and just looking after yourself. Please look after your beautiful pussycats, your beautiful dogs, and your beautiful animals. And please, I know it's hard, but just be kind to people in the world just to make this a better place, because it's getting harder and harder. Thank you very much for listening, and I'm sorry I did go over a bit, but I wanted to cover quite a bit today. Anyway, look after yourself, everyone, and thank you for listening.